Bismillahirrahmanirrahim. Now we are going to do question December 2018, question 3. We are still under MFRS2 share-based payment. Alright, there are 3 requirements in this question. First, prepare the journal entries to record the acquisition of the machine. Acquisition of the machine and the land. So there are 2 assets here. Narration is not required. Explain briefly how the machine should be recognized initially by Zenter Berhad. Okay, and then if Zenter Berhad has the choice of settlement on the acquisition of the machine, advise how it should be dealt with in the financial statement of Zenter. So who is Zenter is actually Alright, let's read the question. Zenter Berhad is a company manufacturing textile for local market and ended its financial statement on 31st December each year. On 1st January 18, the board of directors of Zenter has agreed to acquire a machine valued at 1 million. So this is the fair value of the goods. Okay, so the fair value of the machine is 1 million. Okay, so now remember, under share-based payment, when you acquire goods or services, the measurement will be the value of the goods or service that you receive. So in this case, the value of the goods you receive, the value of the machine is 1 million. Okay, so Zenter here is the entity and the company bought from Saujana. So Saujana is the counterpart. Okay, so the machine was received by the company on 1st March. So we should recognize on the date you receive the goods. So receive on 1st March. Okay, the term of the agreement allows Saujana the choice of settlement. Okay, this is different from June 2019. In this question, the choice is given to the counterpart. Choice to pay is to the counterpart. So, the other party, maknanya our supplier lah. So, we do not know whether the counterparty, when we want to settle the payment, we do not know which one the counterparty would request, either the payment or the equity issuance, yeah. So kat sini dia kata the choice in term of cash equivalent. Okay, the first one, cash equivalent to the market value of 300,000 ordinary share. Okay, the choice of settlement, cash equivalent on 1st April. So maksudnya 1st April tu adalah settlement. This is settlement date. Okay, the second option is by, of course, by issuance of shares, by the issue of 350,000 shares. Okay, at market value on 1st May 18. So this is on 1st May 18, the settlement. Alright. Due to expansion of its operation, the entity, Zenter is the entity, acquired a piece of land. This is another asset. Land on 1st April 18. Okay, land received on 1st April 18. The fair value of the land is 8.5 million. Okay. On the date of acquisition, and the settlement will be made by issuing 3 million. So this one you equity settle. Okay, this is equity settle by issuing 3 million ordinary share. Alright, the market value of the company ordinary share was as follows. Prepare journal entry to record the acquisition of the machine and the land. On the acquisition sahaja. Okay, that means the initial recognition. When you acquire the asset. So for land, the journal entry would be, okay, debit, of course, the asset, debit land, and we will take the fair value of the goods, that will be 8.5 million. Okay, credit apa? Either cash settle or equity settle. This one is equity settle, so you will credit equity by 8.5 million. Okay, so settle on that one. What about the machine? Okay, the machine. When you first acquire, now you see the choice to pay is on the counterpart. So we do not know later on when we settle on 1st April whether we are paying by cash or by issuance of share. So on this date, we need to recognize. So we have to take up both choice, both method of payment. So the first thing is your debit asset, your debit machine. So because under the standard, we will value, the measurement will be based on the value of the goods. Okay, so the value of the machine is 1 million, therefore we will debit 1 million. And then there are two options. You pay by cash or you issue shares. So cash, definitely 300,000 unit. Times with which price? Because you recognize the goods, the standard says that you should recognize the goods on the day it is received, which is on 1st March. So we will take the 1st March value, 2 ringgit 50 cent. So we times with 2 ringgit 50 cent. So the unit tadi 300,000 times with RM 2 ringgit 50 cent. So you should get 750,000. This is, oh salah tulis. Kita belum bayar, so we cannot credit cash. Should credit liability. 750,000. Okay. And for the equity is the balance. 1 million minus 750,000. That will be 250,000. Okay, this one padam jap. Terus saya ingat. So this is just now 300 times RM 2 ringgit 50 cent. Okay, so that is done on the recognition of the machine and the land. Okay, that is A, part A. Part B, explain briefly how the machine should be recognized initially. Okay, this is when you answer this one, it's basically on the accounting treatment. Okay, so we're going to answer that. B. Okay, the transaction is treated as share-based payment under MFRS2. Okay, then the counterpart has the choice either to pay by cash or equity. Okay, so this one you can refer to page 732. Okay, now you look at page 732 under the title share-based payment with cash alternative. Alright, so the cash alternative, the payment alternative is either fall on the entity or the counterpart. So when we did June 19, the choice is on the entity. For this question, the choice is on the counterpart. So based on this page 732, okay, for share-based payment transaction that provide either party, okay, sorry, bawah ya, the second paragraph. If the right to choose settlement is granted by the entity to the counterparty, okay, sekejap. Okay, so kita ikut kat situ lah. If okay, kita dah letak the counterpart has the choice either to pay by cash or equity. So kita akan sambung the entity effectively issues a compound financial instrument which include debt component. Okay, so that's why just now we credit liability, debt component and equity component. Okay, so if you refer back to the journal entry just now, that's why we credit the debts component, which is the liability, and the equity component, which is the equity. So by taking into account these two components, it means that effectively the company is issuing a compound financial instrument. Okay, alright. It's 5 marks kan, macam tak cukup je mark point. Okay, we add some more. Just refer to the textbook. The debts component, okay. The debts component is the counterparties, parties, right, to demand settlement by cash. The equity component is their right to, is the counterparty's right to demand settlement in equity instrument. Okay, so that's it for 5 marks. Okay, next question. C. If Xenter has the choice of settlement on the acquisition of the machine. Meaning that if, let's say, we change the question, now the entity has the choice of paying, of choosing, right, the choice of settlement. Okay, so let's say in C here, assuming that the entity has choice on settlement. Okay, so what is the accounting treatment? So the answer would be based on page 734. Okay, we have done that in June 2019. You just follow the sentence there. If the right is given to the entity, if the right for the settlement is given to the entity, then the entity shall determine whether it has a present obligation to settle in cash. Okay, there is a present obligation to settle in cash if, number 1, the settlement by equity has no commercial substance. 2, if the entity has a past practice or stated policy of settling in cash. And 3, when the counterparty asks for cash settlement. Okay, so that will be the answer for part C. So, and then you continue. If the entity has one of these indication to pay in cash, therefore it should proceed with cash settle. Otherwise, okay, saya tambah. Okay, kat sini kita tulis refer page 734, yeah, 734 Tan Leong Tong, because this is just similar to June 2019. Refer to page 734 Tan Leong Tong, and you just add some more here. Okay, you add some more these sentences. If there is indication, okay, if there is indication of any of the above three, then three condition, then the entity should choose cash settle. Okay, otherwise it should be treated as equity settle. Okay, so that's it. So for this one, you just answer based on page 734, and then you add some more. If there is indication of any of the above three conditions, then the company should choose the cash settle. Otherwise, if it does not fulfill any of the three present obligation there, okay, then the company should treat it as an equity settle. Okay, so that is done for December 2018. Thank you.